Hey everybody, Bush, let's begin Force. Welcome to the weekly technicals for COM dollars for Aussie dollar, dollar CAD, and Kiwi dollar for Feb 19th to Feb 23rd, 2018. And the story in the COM dollar land was sort of very similar as it always been. Relative low volatility and relative strength in the anti-dollar trade for quite a while, although they actually did correct more than the majors in some ways against the dollar as we ended up the week. So it'll be interesting to see how we trade this week. I think it's not really clear where the strength or the weakness of the COM dollar trade is going to be relative to the dollar, meaning that if the dollar gains ground this week, will the COM dollars really sell off? There is some, I think, opportunity here for some turn trades, but they're all much more muted versus the majors that I discussed just a little bit earlier. Let's take a look at the levels. They've sort of changed just tiny bit. Aussie slipped a little bit off the 80 resist. Support is at 78. Dollar CAD definitely got rejected off the 126 resist. Support now at 124. And Kiwi showing, I think, the cleanest sort of a turn trade at 74.50 with support now at 73. On the calendar, not much, although more than on the major side. We have Kiwi retail sales, which I think is Thursday. We have Canadian CPI, and then we have Canadian retail sales also Thursday. So that's essentially it. There's nothing really major on the COM dollar land, but both of those are relatively market-moving events. Certainly could have a modicum of impact into the trade as the week develops. But overall, it's really going to be a question of dollar strength. If dollar strength comes back with a vengeance, certainly the COM dollars are vulnerable to a little bit of a correction. Let's take a look at the charts and just see how the charts are looking for us. And I want to start with Kiwi because to me the Kiwi in many ways is the cleanest and classic turn trade here. We talked ad infinitum about the fact that 74.50 is a triple top formation, which again we rejected today, right? We kind of ran into the 74s, came back down. Ideally, would have loved to have seen this candle close on the lows of the day. Yes, to give me full confidence that there is continuity to the downside. And remember, the continuity in COM dollars takes a long time to develop. Look at this clean flame out shooting star candle. It takes a good week and a half before any meaningful downward draft really happens. Although you did get some continuity, to the downside here, which I think is what really is going to happen. I think the 73 level or 73.25, the 20 SMA is a natural attractor to the downside. So even in a small corrective action, there's still 50, 60 points to the downside. It's a very, very low vol trade as we enter. What will completely change the landscape and really reformulate my thesis would be a takeout at above 74.50. If we close above 74.50, a super strong close above these levels, that really changes the structure from a clear topping formation to very much the next level, which is 75.50, right? The next ultimate peak at 75.50, which is where we would really retest the levels. But for now, if the dollar comes back with any sort of force, certainly we have a correction to 73s as a likely move. Aussie, not as strong as Kiwi, and showing that, although I'm very, very leery of actually calling directionality on Aussie at this point, because you have these two conflicting price signals. And that suggests that maybe we're going to be sort of at this very tug-of-war equilibrium. This was a very, very strong turnaround signal. Look at this move. We went all the way down to the low 78s and then came back up to the highs of the day. It's had its extension. We've had a couple of days of further movement. So 79.30, we went all the way up to 79.80 today. So we've had a little bit of extension and had a correction here. But still, for a full correction to the downside would require a pretty serious dollar rally, which is why I think the Aussie trade is not as clear, and it's kind of floats in this zone. Aussie could easily float all the way up to 81 and still not really break out, still feel a lot of resistance, which is why I think you have to just be very cautious in the trade as you look in the week. But overall, still this 80-81 corridor is the massive overhang. I think it's going to take just a ridiculous amount of dollar weakness for us to break down for it. So if you're looking to position long term, in other words, if you think this is maybe a couple of month worth of trade, then certainly shorting Aussie into this channel, into this whole corridor of 79 to 81, it's probably a very decent idea technically, because you have a tremendous amount of resistance, and if the dollar comes back, it has a chance here now to scale back down to 78s. And it could come down to 78s and it's still really not be in a massive downtrend. It would just be at support. Although you can see that support here, Aussie is not in any kind of a upward channel or downward channel. It's basically in a channel, because the moving averages are essentially flat, showing there's very little directionality on a daily chart. Last, certainly not least, and most interesting in my opinion, is CAD, because CAD fundamentally has a strong story to tell, and we'll know this week, if retail sales are kind of keeping up with the story. CAD has been actually remarkably resilient on the economy, despite the fact that oil has kind of shifted lower, and the fact that they've really been able to, I think, diversify away from natural resources to a much more balanced economy, and you can see that in all the Canadian production, which has given CAD a lot of strength. We've moved all the way down to 122s. The bounce back over here has been strong, but it basically is failing at a lower high, which suggests that we have a reasonable chance here to maybe trade back down to the 124s. This would be on further dollar weakness. Now, dollar strength certainly has pushed CAD up to the 25s, but I feel that the CAD is going to encounter quite a lot of resistance at this 25.50, 26.50 level. So any strength in a dollar will probably be least present against CAD, which sets us up for some possible cross trades as we go into the week. For now, on its own, it's kind of an indeterminate trade. You could try to trade it, just on an extension all the way out to 26.50, but this is a pretty serious resist level, and that's where I would start to look for pro CAD trades on a cross basis, if nothing else. So we're going to take a look at the crosses next, but that's basically how the majors end up. They are just going to be a lower volatility reaction to whatever the direction the dollar takes this week. Wish you guys the best luck, the best trading. Boris Landsberg over and out.